Lindsey, let's start with the economic data that we just got out of the US. It was positive, higher than expectations in terms of home sales and also consumer confidence. Does that give you more pause when it comes to the FOMC? Of course, we should add that it's beginning its two-day meeting today.
No, it really doesn't. When we look at pending home sales, yes, we saw a little bit of a higher than expected gain there, but housing in general has been a very weak component in the U.S. as of late with existing sales, which is really giving us a better sense of the activity in the U.S. trending negative for nearly a year. And as we saw in the first quarter GDP report, residential investment was a big contraction from that top line number. So, yes, we are continuing to see volatility month to month in terms of the U.S. data, but really that longer term trend, at least from a housing perspective, isn't going to sway the Fed one way or the other. We do expect the Fed at tomorrow's announcement to reiterate their still patient stance as they announced at the start of the year and reaffirm their position to the sideline. We don't expect any further rate action through the end of the year. We also expect the Fed to recharacterize their expectation for growth at a somewhat tempered level, but still very positive, very optimistic. Now, there is not an updated projection in terms of the dot plot or the summary of economic projections. So we will focus primarily on the press conference. This is going to be particularly important this month. And we're going to be looking specifically for the chairman to really give us his diagnosis of what happened in that first quarter GDP report, as we saw headline strength, but some alarming concerns in terms of weakness in the underlying details. And of course, against the backdrop of the latest disappointing inflation numbers and what that means for the rate pathway going forward.